Okay, let's take a look at the 120-minute chart in the S&P futures, and I have identified lines in the sand in the S&P futures recently on this chart by just running the symmetrical projections. Okay, and each time that we've seen a pullback, I've run the projections. If we have support and you start to see buy triggers, you can take another trade on the buy side. Now we just saw that again in today's session, where we actually saw a little bit of a zigzag pattern into the lower end of a support cluster that I was watching. So we did take out some of the support that came in a little bit higher, but we did hold this lower support that included a 618 retracement of one swing, a 1272 extension of another swing, and then a lot of these symmetrical projections. But now what? Well, also besides that, we did have some timing here. At the same time that we were testing support, we had timing. But the typical pattern tells you that if it's going to continue, that we should basically pull back and then extend. So that means that the initial upside target, if this is a more important low, because I don't know if it's going to be a more important low. All I knew was basically that we had support here, and if it triggered an entry, you could take an entry and define your risk underneath the area. So again, yeah, we had the zone, but I had no idea it would hold. But now, if we do continue to hold, your typical target is the 1272. I don't know if we're going to get there, but it is the target that we shoot for. But I do want to show you one other thing here in the case of the S&P, because we've had a retracement, a 618 retracement that we're just short of this prior high to low. And if you measure this prior low to high swing and project it from the new low, these overlap really nicely and comes in at 2397.50 to 75 area. So this is the way I have to look at it. The path of least resistance would suggest that we get another swing up. But if we fail to clear this area, okay, get through it by a decent margin, you really want to ratchet up your stops, because then that's the place where it has the chance to fail. Okay, because what if instead of the pattern being an extension to the upside, what if it shifts to a pattern of lower lows and lower highs? You always want to be prepared for what might go wrong, when you're looking at a particular scenario. And in the case of this bullish scenario for another swing up, this is what could go wrong if we can't clear it. Okay, so that's what I'm going to watch next. Just know that if we do clear it by a decent margin, then the odds increase for continuation towards that extension target.